Good day, my name is Viabidepni Victor and I am from Group 2. Today, my friend and I will be presenting our assignment 2, which included 2 case studies. First case study is regarding Aras Infinity Sendirian Berhad, and second case study is regarding Faradiana budget preparation. So now, I will provide an overview of AISB Company's journal entries, which is a crucial record that tracks all financial transactions in chronological order. On July 1st, 2023, they paid 4,000 ringgit in interest on their notes. Later on September 30th, they made an annual insurance payment of 2,000 ringgit for the plant and equipment. On December 1st, they distributed 2,000 ringgit in dividends to their shareholders. By the end of the year, on December 31st, they recorded 4,250 ringgit as the annual depreciation on their plant and equipment. Throughout the year, AISB earned 420,000 ringgit from selling inventory to customers. They spent 80,000 ringgit on manufacturing inventory from raw materials, and they also made payments totaling 10,000 ringgit to the creditors and received 54,000 ringgit in cash from their customers. Additionally, the CEO purchased artwork for 3,000 ringgit, and lastly, AISB paid 180,000 ringgit in salaries to the factory line employees and 45,000 ringgit to the administration staff. So, for the income statement, starting with the sales revenue, AISB generated 420,000 ringgit from inventory sales. Next, let's take a look at the cost of goods sold. The beginning inventory was 50 units, which valued at 10,000 ringgit, and they manufactured an additional 1,300 units, adding 260,000 ringgit to their inventory. This gave them a total of 1,350 units available for sale, which costing 270,000 ringgit. After selling 1,200 units, the ending inventory was 150 units, which valued at 30,000 ringgit. Therefore, the cost of goods sold was 240,000 ringgit. This left them with a gross profit of 180,000 ringgit after subtracting COGS from the sales revenue. So for the operating expenses, annual insurance cost 2,000 ringgit. Depreciation on the plant and equipment was 4,250 ringgit. Sales commission amounted to 42,000 ringgit. Fixed administration salaries was 45,000 ringgit. Manufacturing expenses, including salaries for factory employees, 180,000 ringgit. Consultant fees, 11,000 ringgit. Raw materials, 80,000 ringgit. Which in total, the operating expenses were 364,250 ringgit. These operating expenses from the gross profit, they have an operating income of negative 184,250 ringgit. They also had an interest expense of 4,000 ringgit on notes payable. After accounting for this interest, the net income before taxes stands at negative 188,250 ringgit. So for simplicity, they have no tax expenses, which making their net income, or can be called as net loss, is 188,250 ringgit.
Hello, my name is Tosimon Lianu and I will continue to the balance sheet. First, a balance sheet is a financial statement that report a company asset, liabilities and shareholder equity at a specific point in time. So let's look at the slide. At the left side is for the asset, and at the right side is for the liability and equity. Okay. For current asset, which is cash, it is 53,000 ringgit. For the cash calculation is, for initial cash is 20,000 ringgit. For the transaction is minus 2,000 ringgit for dividend, minus 4,000 ringgit for the interest, minus 2,000 ringgit for insurance, minus 10,000 ringgit for creditors, and plus 54,000 ringgit for receipt, and minus 3,000 ringgit for the artwork. So the final cash is 53,000 ringgit. For the account receivable, it is 466,000 ringgit. For the inventory, it is 30,000 ringgit, which is the calculation is initial inventory is 10,000 ringgit, which is 50 unit per 2 ringgit each. For the transaction is minus 240,000 plus 260,000 for manufacture inventory. So the final inventory is 30,000. For the prepaid insurance, it is 2,000. So the total current asset it is 551,000 ringgit. For the non-current asset, the accumulated depreciation it is negative 14,253 ringgit. The net plant and equipment it is 18,000 ringgit. The artworks it is 3,000 ringgit. The patents it is 15,000 ringgit, and the total non-current assets it is 21,750 ringgit. So for the all total asset it is 572,750 ringgit. Next is for the liability and equity. For current liability, the account payable it is 10,000 ringgit. For the overdraft it is 9,000 ringgit, and the total current liabilities is 19,000 ringgit. So for non-current liabilities, the note payable is 100,000 ringgit, and the total non-current liabilities it is 100,000 ringgit. So the total for the liabilities it is 119,000. Okay, for the equity, the owner equity it is 10,000 ringgit, and for the retained earn is 446,750 ringgit. So the total equity is 456,750 ringgit. So the total liability and equity it is 575,750 ringgit. So we can see for the total asset and the total liabilities and equity it is balanced. Thank you.
Good day, sir. My name is Muhammad Tazik bin Muhammad Hassan. Today, I will present the calculation and analysis of the contribution margin per unit for AISB. To calculate the contribution margin per unit, we need to identify two main components, the selling price per unit and the variable cost per unit. Let's start with the selling price per unit. AISB sold 1,200 units at 350 ringgit each. This is straightforward and gives us the revenue generated per unit sold. Next, we look at the variable costs. These costs change directly with the number of units produced and sold. For AISB, variable costs include raw materials, RM 80,000, salaries for full-time factory line employees, RM 180,000, consultant fees, RM 11,000, and sales commission, 10% per unit sold. The sales commission per unit is calculated as RM 350 multiplied by 10%, which equals to RM 35. The total variable cost per unit will be the sum of raw materials, factory salaries, and consultant fees divided by units produced, plus the sales commissions. And the total variable cost per unit will be RM 243.46 cents. Finally, we calculate the contribution margin per unit by subtracting the total variable cost per unit from the selling price per unit, and this will be 106 ringgit and 54 cents. This 106 ringgit and 54 cents represent the amount of money each unit sold contribute towards covering fixed costs and generating profit. Moving on, The break-even unit represents the number of units AISB needs to sell to cover all its costs and reach a 0-point profit. This is a key metric for ensuring that our pricing and production strategies are on track. The formula for calculating the break-even unit is total fixed cost divided by contribution margin per unit. We have already calculated the contribution margin per unit as 106 ringgit and 54 cents. Fixed costs are expenses that do not change with the production volume. For ASB, these include fixed administration salaries, 45,000 ringgit, depreciation, 4,250 ringgit, and interest on notes payable. Given the interest rate is 4% per annum, and the notes payable amount is RM 100,000. The interest expenses per year will be RM 4,000. The total fixed cost will be RM 53,250. By using the formula above, the break-even unit is approximately 499.81 units. This means AISB needs to sell approximately 500 units to cover all its fixed costs and reach a break-even point. Any units sold beyond this number will be contribute to profit.
Greetings to everyone. My name is Muhammad Ashraf Akmal and I am part of Group 2. I will be presenting for case study 2 on part A and B. So the purpose of this report is to provide a detailed financial plan for Farah as she pursue on a 4-year engineering program at University Malaysia Sabah. So moving from Pitas to Kota Kinabalu involves significant changes in budgeting and lifestyle. So this report will help ensure she manages her finances effectively during her time at UMS. Now let's look at the income summary for Farah for 1 year. First, we have the scholarship. Farah receives 800 ringgit per semester, and since there are 2 semesters in a year, this gives her a total of 1,600 ringgit annually from the scholarship. Next, her sister has generously provided a loan of 6,000 ringgit. So this means Farah receives 1,500 ringgit per year. Moving on to her part-time job during semester, Farah plans to work 20 hours per week at Pizza Hut for 14 weeks each semester by earning 5 ringgit 50 cent per hour. When we calculate this for the 2 semesters, it totals up to 3,080 ringgit. Additionally, during the semester break, she intends to work 35 hours per week for 10 weeks. So this will earn her an additional 1,925 ringgit during the break. When we add these amounts together, Farah's total annual income is 8,105 ringgit Malaysia. We have conducted a survey for rental properties near University Malaysia Sabah and recommend a house in Kingfisher Park for Farah. So here are the details. So the property is located in Kingfisher Park, which is conveniently close to UMS, approximately 5 kilometers away. The monthly rent for the entire house is 800 ringgit. Since the house will be shared among 6 persons, Farah's share of the rent will be 133 ringgit and 33 cents per month. Now, let's discuss some benefits of choosing this property for Farah. Firstly, Farah will have a short commute, saving time and reducing transportation costs. And secondly, living in a shared house significantly lowers the cost of rent, making it more affordable on her budget. And lastly, Kingfisher Park is a well-established residential area with access to facilities such as grocery stores and public transportation. In table 1, we break down the fixed cost for Farah's car usage. The first one is car insurance. This is the cost for comprehensive coverage of her vehicle. It amounts of 415 ringgit annually. And secondly, for the road tax, Farah's annual road tax cost is 20 ringgit Malaysia. So the total fixed cost for her usage are 435 ringgit annually. These expenses are necessary regardless of the amount of travel she undertakes throughout the year. Here we have the travel distances and fuel consumption details for Farah. First, in the travel distances table, which is on the left side, we can see Farah travels a 10-kilometer round trip to UMS 5 days a week for 30 weeks, resulting in a total of 1,500 km annually. Then she visits her hometown, Pitas, twice a month, covering a 340-kilometer round trip, each time for 10 months, totaling 6,800 kilometers. And her additional travel contributes an estimated 100 kilometers per month, resulting in 1,200 kilometers annually. Therefore, summing these distances gives a total of 9,500 kilometers for her total annual distance. Next, in the fuel consumption table, the average fuel consumption of her car is 21.6 km per liter. For the total annual distance of 9,500 km, she will need approximately 439.81 liters of fuel, where the current fuel cost is 2 ringgit and 5 cents per liter. From that, her total fuel cost is 900 ringgit and 62 cents annually. Based on the table, we have the total annual car cost for Farah, as we have calculated from previous, combining the fixed and variable costs. Farah's total annual car cost amount to 1,335 ringgit and 62 cents. These costs cover insurance, road tax, and fuel, ensuring an overall view of the expenditure associated with car usage.
Assalamualaikum and good day. My name is Muhammad Irfan and I'm going to present for case study number 2 on the allocation of expenses and comparison of total income versus total expenses for Farah. First of all, Farah budgets of RM20 per day for 3 meals and snacks. Cooking at home and limiting dining out help manage costs effectively. As we can see from this table, for food, monthly is RM600 and annually, which is for 12 months, are RM7,200. Moving on to the utility bills such as internet, house maintenance, etc., university expenses like tuition fees, books, stationeries, and even educational materials are counted annually. Clothes that are bought monthly are based on seasonal, entertainment, and miscellaneous. All this will cost around RM13,400. Next, we will be looking at the comparison of Farah's income and expenses for the year, which is the total income summary is calculated to be RM8,105 only. All this income comes from the private scholarship, sister's loan, and also the part-time job. The total expenses are calculated, and this negative balance highlights a significant shortfall in Farah's budget for the year. To address this deficit, Farah can consider increasing her income through additional part-time work or freelancing, reducing non-essential expenses, and seeking additional financial aid opportunities. Farah would need another RM8,000 to cover all her expenses. So, thank you for watching, and I hope this overview of Farah's financial plan provides insight into managing university expenses effectively.
Good day everyone, my name is Shahira and I will continue our presentation by discussing Farah Diana's current financial plan, the challenges she faces, and the strategies she can implement to achieve a balanced budget. Our goal is to understand how Farah can manage her finances effectively while studying at University Malaysia Sabah. For the income analysis, Farah's annual income is 8,105 ringgit, composed of private scholarship, which is 1,600 ringgit, a sister's loan 1,500 ringgit, part-time job during semester 3,080 ringgit, part-time job during semester break 1,925 ringgit. Despite working part-time during semesters and full-time during breaks, her income is insufficient to cover her total annual expenses of 16,335 ringgit 58 cents. The graph presents the detailed overview of Farah's annual expenses, which is highlighting a financial budget through the year. Farah's annual expenses amount to 16,335 ringgit and 58 cents, covering various essential and non-essential categories. Her rental costs are relatively low at 1,599 ringgit and 96 cents due to shared housing, which significantly reduces expenses by splitting rent and utilities. Car costs total 1,335 ringgit and 62 cents, encompassing fixed expenses like insurance and road tax, as well as fuel and maintenance. Food expenses, a major category, amount to 7,200 a year, roughly 600 per month, for groceries and occasional dining out, reflecting the necessity of daily sustenance. Utility bills shared with housemates add up to 1,200 ringgit annually, covering basic services like electricity, water, and gas. Her university expenses for her engineering cost total 2,000 ringgit, which includes tuition, books, and other educational material essential for her studies. A modest clothing budget of 600 ensures she maintains a reasonable standard of living. Entertainment costs allocated at 1,200 ringgit support her social activities and leisure, promoting a balanced lifestyle. Additionally, a miscellaneous category of 1,200 ringgit provides a financial buffer for unforeseen expenses such as medical emergency or minor repairs, ensuring Farah can manage unexpected costs without disrupting her budget. To bridge a significant financial gap, Farah Diana can adopt several strategies for financial stability, increasing her income by seeking additional part-time work on weekends and holidays, and exploring tutoring or freelancing opportunities, especially in engineering, can provide supplementary funds. She also can reduce expenses by implementing cost-saving strategies such as book buying, meal prepping, and limiting dining out, alongside opting for free or low-cost entertainment options. Next, shopping at second-hand or discount stores and limiting non-essential purchases will further trim her budget. Farah should also actively seek additional financial aid by applying for more scholarships and grants based on her academic performance or financial need, and consulting the university's financial aid office for potential grants, bursaries, and emergency funds. Furthermore, efficient transportation cost management through carpooling with fellow students and limiting trips to her hometown can significantly cut down fuel and maintenance costs. Lastly, regular budget monitoring and adjustment using budget app and financial planning tools will help Farah stay on track, make informed financial decisions, and ensure long-term financial stability. In conclusion, Farah can achieve her financial stability if she implements the strategies before, by increasing her income through additional part-time work and freelancing, reducing non-essential expenses by adopting cost-saving measures, seeking additional financial aid through scholarships, grants, and university financial resources can provide much-needed support. In addition, she can managing transportation costs by carpooling and limiting trips to her hometown, coupled with regular budget reviews using financial planning tools, will ensure she stays on track financially. Proactively addressing these challenges will alleviate financial stress, allowing Farah to concentrate on her academic and personal growth. With careful planning, disciplined spending, and exploring various income avenues, Farah can effectively navigate her financial landscape and enjoy a fulfilling university experience at University Malaysia Sabah.